I think it's just built into my DNA that anytime that I am, faced with a big challenge, I want to make sure that, we have all the right voices around the table. And so I think in part, you've got sort of the lens of, how I sort of grew up and realizing that, look, things weren't going to be easy. So I just needed to persevere. And then finding that, actually creating an environment that makes it easy for everybody to be a part of, which I think does accrue to women and minorities and people of all kinds of backgrounds to really thrive. I mean, those are the two pieces that I really point to that have influenced me.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
All right, welcome everyone to this episode of the Bull of Wall Street podcast. Today, we have on another very special guest. She is the CEO of State Street Global Advisors. She can tell us what her updated AUM is in ETFs in a minute, but it's obviously the company is a very large company in our business. And so we're very excited to have Yie-Hsin on. And I'm particularly interested because, as you can see, she looks Asian. And she has an Asian background like me. And I asked Paisley, who is also a co-host regularly on our show, to participate because I'm also interested in talking to her about, females in finance. It's unusual to have someone like her at the top job as CEO of a large firm like this in our business. And as many of you know, I'm a big proponent of female financial advisors, females in the finance industry. I'd love to try to promote more females into our industry. I think that since this podcast is mostly for advisors, that actually the financial advisor role is uniquely kind of suited for a lot of working mothers potentially. And so with that, I'd love to welcome you, Yie-Hsin. And I wanted to start out by, having you tell us about your background and how you've gotten to your role that you're in today.
So, Jimmy, thank you so much for having me. It's just a delight to be here. And obviously, we enjoy a tremendous partnership between our two firms. So, by way of background, I've been the CEO for State Street Global Advisors. We're about 4.7 trillion in total assets under management, 1.6 trillion in our Spider ETF range. And we've been on these past 2 years really embarking on a growth agenda, and it's been really exciting. I found my way into financial services and asset management coming out of business school, actually. I studied as an engineer in my undergrad days, and I was trying to decide between the two and decided when I had the opportunity to go to business school, I would jump on that. And then found my way to Wall Street, many years as an investment banker, focusing on the real estate sector. And then about a dozen years in, I had an opportunity to switch over to Morgan Stanley's asset management business, and I jumped at it because I love the rigor and the interest of the markets, but at the same time, really thinking strategically about where to take a business, a competitive environment, and the opportunities for us to really punch above our weight. And so that's really been the focus of the last 25 plus years of my career. From MSIM, I had spent a year at Bridgewater Associates, which is a big hedge fund. I know we'll talk a little bit about them in a minute. And then most recently, I was at New York Life, which is a large mutual insurance company. And I was the CEO of the third-party asset management business before stepping into this role.
That's amazing. And I think you're a native of Chicago, is that right?
That's right.
Your parents immigrated to the United States?
No. I think my parents' story is like a lot of people's stories. They came to the U.S., really to take advantage of the American dream, if you will. My mother was in her late teens, my father in his early 20s. They had not met yet, but they both came here to study. So my father studied engineering, and you might understand why it is that I ended up studying engineering, and my mother was studying nursing. And they managed to find each other, and so I'm the oldest of three girls in our family.
So did they meet in Chicago? And is that how you grew up in Chicago?
They did. Somehow, my father was at the University of Texas in Austin,
Oh,
and he got his PhD at Northwestern, which is where I also went.
huh.
And then my mother, of all places, she was in Montana at a nursing school, and she found a job in Chicago, the University of Chicago medical system, and that's how they met.
Wow.
And yeah, that's
Well,
exactly.
now I know the connection to why you have some of your guys' meetings at Northwestern University. I've had the pleasure of being there for some of the due diligence meetings, and it's just an incredible campus there and learning experience at the university there. And but you also got your MBA at Harvard, is that right?
I did. I alluded to studying engineering as an undergrad, and I loved it because I really love this idea of problem solving. But at the same time, when I was thinking about which avenue to go down, I was planning to get a master's degree in either case. But then when the opportunity came to get my MBA, I had thought about some of the summer experiences that I had had, and I recalled one where I was in a lab, one of these very quiet labs, measuring the decibel level of fans inside of PCs. And there, ripe old age of 19, I thought, well, this is not the direction I want to go. And so I ended up pursuing the finance route. Um, but that's really the launching off pad for me coming out of business school.
So talking about stereotypes, my mother is about 5 foot, and but she was a singer, so she has a very loud voice. So I don't know if I would describe her as a tiger mom, like a typical Asian tiger mom. But boy, I was more scared of her than my dad for sure. Was your mother kind of a tiger mom, or was your dad more the disciplinarian?
I would say it was probably more my dad than my mom. Um, and I think we were also helped because we didn't have any brothers.
Mm.
And you'd appreciate this, right?
Yep.
If we had had a brother, regardless of where in the ranks that brother fell, I think he would have gotten all the attention. But because it was just three girls, both my parents really just focused on us and wanted us to take full advantage of everything that was available to us, education wise, career wise, financially, all of those things that they sacrificed so much when they
Yep.
came to this country.
And I often say that I feel like I am the embodiment of the immigrant coming to the United States and living the American dream. I'm so grateful that we came to the United States and all the opportunities that I've had and my family, my mom and dad, their whole deal is if my brother and I just have one brother, if we're okay and our kids are okay, then they're very happy, right? So it's a typical Asian kind of I know other cultures are similar, but anyway, I'm Korean. Um, but that being said, I mean, I also started my career as a financial advisor with Mass Mutual Financial Group. So I had the opportunity to learn a little bit about how mutual insurance companies work, an enormous amount of money that they manage. So it sounds like you're on the asset management side for third party, but the general account business is also obviously a very incredibly large business for a company like New York Life. And now at the multi-trillion, I can't believe how much money you guys have under management. That's an insane number. But one of the things I was told and have noticed, I guess, since you've come to SSGA, was that you're adding in some active products to your lineup. Which for me as a financial advisor, I think that ETF Shell is an amazing structure, and that active portfolio management absolutely could be something that's becoming more and more prominent now versus just passive. Can you talk a little bit about that? And is that something because of your background and your belief, or is that, yeah, tell us more about that.
Yeah, no, I couldn't agree with you more, Jimmy. I think that ETFs came to be, I guess it's now more than 30 years ago because we celebrated the launch of, the very first US listed S&P 500 ETF 31 years ago. But, we're finding the adoption of the structure and the wrapper, not just in the US, but around the world. I think it just very easily gives investors, with very small net worth to a lot of net worth to be able to gain access to a diversified portfolio in a very quick, transparent, cost-effective way. And I think it's with that thinking in mind that we've seen such growth around the active space as more and more firms have really embraced ETF as the vehicle to go to market with. And one of the approaches that we have taken, because despite our size, I would say if you look at the core of what we do, we manage a tremendous amount of custom index mandates for very, very large institutions. Obviously, we have a very significant ETF business, money market business, and then we bring it all together in terms of tailored solutions, whether those are model portfolios or asset allocations. And while we have delivered some active-oriented ETFs like this past year, we launched this My Income series, which was really intended to focus on those advisors that might build laddered portfolios for their clients. Instead of doing that, this is an option to have different maturities. And as they roll off, there's just another ETF to roll on. We've also partnered with external firms, and that's why I think our profile has been perfect for that. It's been a busy couple of weeks for us as we launched a private credit, public credit, investment grade ETF in partnership with Apollo. Very, very excited about that because that starts to bring sort of alternative exposure to a structure that investors are very familiar with. And then last week, we launched an all-weather ETF in partnership with Bridgewater. Again, Bridgewater is the world's largest hedge fund. And this strategy in particular was built by Ray Dalio for his family office. And it's just really exciting to be able to take some of these strategies that historically have only been available to institutions or high net worth investors, and then really to introduce those today because this market is obviously pretty volatile at the moment. And to be able to have, some of these exposures really provide that extra level of diversification.
That's really interesting. I'm actually here in Dallas right now at a Blue Vault conference, and they're an information provider for alternatives. And so I'm doing a panel on Wednesday with one of the friends of ours, and we use Apollo for private credit. So he'll be with me talking about that. So that's great. I wanted to switch gears. We are going to let you talk about the markets. I want to get your opinion. We want to get your opinion on what's going on in the markets right now and the economy, bigger picture. But I want to shift and talk a little bit more about women in finance, especially with the whole controversy lately with DEI and stuff. And I'm going to try to let you and Paisley talk about it more as two females that have been in the finance industry for a long time. And so we started ESG models many years ago, actually. And we think that there are a lot of investors that are interested in trying to align, their values with the way they invest their money. We even have a portfolio that we created that has a gender lens to it. And so while, and I think I'm in a little bit of a unique spot because I'm a minority and I can talk about it. And I've always had a lot of female advisors at our firm and a lot of people with different backgrounds. But I think part of that for me has been that I think that maybe the approach that was difficult for some people is that the inclusive part wasn't necessarily focused on as much. And so, again, I like talking about that. And I love meeting females in finance, advisors, other people like yourself. But can you talk a little bit about that as much as you can in terms of your journey as a woman in the financial industry that's typically male dominated? Especially to me, on the C-suite side, you have a top job at one of the largest asset managers in the world. And then Paisley, you guys chat about that.
Yeah, I have plenty of questions as well, but go ahead, Yie.
All right, I'll start and then I'll turn it to you because I know you have a really interesting story too, Paisley. I think throughout my career, really throughout my life, I studied engineering. I was one of 4 women in my class. I moved into investment banking, in particular real estate investment banking, which also is very male dominated. I think that, I think this is maybe where some of my background and where my parents came from, probably similar for you, Jimmy, is that the view that they had is they came here for opportunity, but realized that it probably wasn't going to be as easy for them because this isn't where they grew up. This is not their culture. And so I sort of anticipated that, in my journey too. And so in many ways, I just kind of set it all aside and really just focused on, what is the opportunity in front of me? How do I learn as much as I can? I didn't necessarily have role models as I was growing up and, coming along in my career. But I would always pay attention to, those that were having success to my left and right, or those that were in front of me, and realizing that there were certain skill sets that I just needed to learn along the way. And I think one of the reasons why I embrace, having such an inclusive culture is because of the middle portion of my career. I alluded to doing investment banking for about a dozen years. And then after that, for about a good 15, 20 years, I think I had a different role, a different responsibility, different company. And so I increasingly found myself in situations where I wasn't the expert in the room. I didn't have all the answers. And what I found was creating an environment where you can bring people with all of this wealth of background, perspectives, points of view together, solving a really big problem or going after a really big opportunity, and encouraging everyone's voice to be heard, to sort of debate different points of view, that time and time again, we would come up with a much better solution than any one of us would have come up with. And so as a result of that, I think it's just built into my DNA that any time that I am, faced with a big challenge, I want to make sure that, we have all the right voices around the table. And so I think in part, you've got sort of the lens of, how I sort of grew up and realizing that, look, things weren't going to be easy. So I just needed to persevere. And then finding that, actually creating an environment that makes it easy for everybody to be a part of, which I think does accrue to women and minorities and people of all kinds of backgrounds to really thrive. I mean, those are the two pieces that I really point to that have influenced me.
I didn't ask you this before, but do you play sports, or did you play sports growing up?
You know what? I wish I did. But I didn't. I think my parents were very, very focused on me studying and not
Academics?
not spending a lot of time with athletics. But
Well, and the reason I brought it up is I bet you that you're very competitive, and obviously you have to be in order to get to a job like you have now. And so I just think when you walk into a situation and you're not in the majority, that you feel like an underdog coming in, which then kind of gives you a little bit more of insight. And Paisley, that's what I'd like to ask you too. Like, how do you feel about that? Being in an industry that's historically been more male dominated, and I think we're starting to see a shift, especially for financial advisors. I've noticed that when we put out a post for like a financial planning job, we have way more resumes that come in from female advisors, CFPs, than males really at the moment.
Which is so important. And just as background, I oversee some of our student managed investment fund work under the CFA Society here in Orange County. And a big part of what we attempt to do is broaden the scope of what these, this next generation coming out of undergrad believes that they're capable of in this industry. And I think a lot of it is if you don't see a reflection of yourself where you're trying to go, it becomes increasingly difficult to understand how you pave that path to get there. And so as simple as it is, it starts by people like Yie, people like myself, the women advisors, Jimmy, that you work with, so that the next generation can look up and see that they belong, they have a place there. And that transcends, just beyond gender, but also any kind of element of diversity. And I think it's so important too. And you were highlighting some of this is the cognitive diversity that comes into the decision-making room as it relates to the investment industry. It's so important to have this mosaic theory as we put pieces together, whether it's portfolio management, whether it's marketing, whether it's advisory practice, having that diversity of thought and the process by which people make their decisions is so different. And I think it's, they have different, I think even indexes or strategies that show, women leaders, but I think it's the combination of women and men and different backgrounds, whether you grew up, and immigrated into the country, or you just grew up in a different socioeconomic background. I think that's so important if you grew up having to fight for scraps every day, the way that you think about taking risk and allocating capital is going to be so different. So really important, but go back to your question, Jimmy, is like, how do I think about being in a male dominated industry? I think you're exactly right. And I'll be the first one to admit, like, the inferiority complex of like walking into a room, and I still say this all the time, is like, fake it till you make it. Because I think that's really what differentiates, like, whether you're a man or a woman, whatever your background is, I think everybody has insecurities at some point in time. And so it's like, you have to just fake it sometimes. You have to say, like, I can do this, I will do this. And then you realize we're all just doing that on a daily basis to make it through. And so I think some of that mentality, and even your question on playing sports, the competitiveness of like, I have this opportunity, I want to win. And maybe I don't feel, prepared going into it, but as long as you do as much as you can, and then you just do it, I think that's half the battle. Like they say, is like just showing up sometimes is half that battle. And I would say the other thing for me that's been really helpful is I tend to be naturally outspoken. So just being willing to have an opinion or share a thought. And if you don't have any opinions or thoughts, then to ask a question. And I think just being more vocal helps the people around you, understand they're in the room, they want to engage, because women in general tend to be a little bit more soft spoken. So I think that also helps, is just showing up, asking the questions, having opinions. And as easy as that sounds, I mean, sometimes that's half of it, just to get some more of those at bats, and can start kind of paving that path for yourself. So that's kind of how I thought about it.
So I think that's cool, because I think if for let's say that younger women that might listen to this podcast, or the parents that are advisors and they have daughters, and they're thinking about what career path to take, I think, as we all know, women are going to control more than 50%, if they don't already, by a decent margin of the wealth in the United States, right? And so I think, what is it, like by 2030, maybe 60% of the wealth. And so there's a tremendous, I think, opportunity for women in this industry in all different ways, whether it's in asset management or banking or as a financial advisor or whatever that may be. And it's kind of funny because, I'm aware of the studies between the pay gap, right, with women and men and those kinds of things, right, historically. But all the women that I've surrounded myself around, I guess, or that I'm around, they're the strongest people in my life. They're not the ones that are not asking for pay raises. In fact, the women that are around me are always the ones, if I was the employer, that have been asking for more compensation and those types of things. And so I don't know, maybe it's because that I hope that our firm feels like a comfortable place for women to work at, is why maybe that we have more stronger females.
Yeah.
And our top advisors, by the way, a large percentage of them are female advisors, which is great. So Is there anything else you might want to add to that, as far as just, women and opportunity in this industry?
Yeah, look, I mean, I think this, whether it's asset management or wealth management, it's a wonderful place for a woman to have a career, because first and foremost, I think everything that we do are really helping people, reach their own aspirations for themselves, for them and their families. And it's an opportunity to really build relationships, ones in which, really can provide the much needed advice and professional asset management that's necessary to, for everyone to take their hard earned dollars and put them to work and make sure that they're able to, save for college education for their children, or for that home, or for their ultimate retirement. And so I think the more that we can talk about all the good that we do, I think that's one thing. Secondly, as you point out, I mean, there's a real entrepreneurial aspect of, what we each do. And so the opportunity, I think, for the advisors that you have is really to build this business and to build it in the way that they, they think they can deliver the most value to, their end clients, to leverage all the scale and resources that you provide. And so I do think that there's a lot that, that we have the opportunity to continue to further. And I do think you're right about this transitional wealth to women, probably even before the next generation. And so whether it's for, more women to be in advisor roles, or for the men that are advisors to couples today, or to women, to really take the time to understand, what are the overall objectives and provide that financial education so that there's that level of comfort of feeling confident, a willingness to invest, because we all know, right? The more that you invest, the earlier you do this, the better off you are. And of course, women tend to live longer than men. And so really with that in mind, I think there's so much value, we can all bring, and it's telling those stories that I think really begins to sort of connect what sometimes can be seen as a very technical business that we're in. But if you really pierce through it, I think it's actually really quite simple and really quite meaningful.
Last night I arrived and had dinner with two of our advisors, and I just finished reading a book. It's a short book, but it's called Simple Wealth, Inevitable Wealth by one of my heroes in this business. His name's Nick Murray. So you have to be around the business a little while as a financial advisor probably to know who he is. But Nick basically was doing, financial advisors should be behavior coaches. And he was talking about that in the 90s, writing books, and has consistently done that. And he talks about how, 90% of what we as a financial advisor should be doing is to be helping our clients with planning, and then, talking about all the stuff to help them manage their behavior the best way we can, which naturally us men know women, generally speaking, are way better with your EQ than we are. So as far as connecting, communicating, listening skills, getting people to influencing them to make the right decisions for their own money. I think us financial advisors just spend way too much time on the 10% product selection, market timing stuff that we cannot control.
Agree.
We should let you guys, the Yie-Hsins and the P's of the world worry about that stuff. But I think the financial advisor job should be way more focused on the EQ part of what we do, get better, hone our skill set on how to communicate better so that the client's outcomes are much better. So anyway, I'm on a rant here. But as you can tell, I'm a big fan of females as financial advisors in this industry for all these reasons. I think females are actually better at the listening skills and just being more collaborative and all that stuff. So anyhow, that being said, I think we'll see more of a mix and more people, more females in the industry in all different roles. And to have the two of you as representatives, like you said, Paisley, having the ability to see someone, I can imagine like my daughter, who's not interested in this business, but let's say 10 years ago, saw a podcast like this, maybe she would have decided to try to maybe give this career type of a shot versus where she's at, which is great. She's a creative person, and she's actually in New York City. But anyhow, how about the markets? Let's talk a little bit about that. I mean, you have a huge team that does this. I'm a big fan of Michael Roney, that's on your team. I've seen him in a lot of different meetings that he's been the speaker of. But where's your view right now, and maybe even your own personal opinion about where we're at with the economy, with the markets this year?
Yeah, so look, I mean, I think there's been a wall of worry being built up, really as we sort of turn the corner into this year. And of course, we're coming off of 2 exceptional years in the stock market, arguably stretched valuation, credit spreads are really tight, and then increased volatility. Of course, we've seen a number of executive orders. I think President Trump has written more in 10 days than the average president will write in 100 days. But that all said, we do think this is, ultimately, we have to see what actually happens in action that's really going to drive, the rate of inflation, what impact that has on GDP, overall debt levels. And so, while it's good to think about and contemplate all of these things, it does need to be taken together. And we also ought to take time to understand exactly what are the things that are going to impact. From our opinion, look, we do see a need for diversification. And if I look at the flows that have really dominated in the first part of the year, they have been more defensive in nature. So we're seeing a lot more flows into, a really short duration, 1-3 month treasuries. Gold continues to perform incredibly strong. I talked a little bit about alternatives as sort of a diversifier, but on balance, we're just seeing much more of a quality tilt. And we still remain constructive, believe the base case scenario is a soft landing. that, perhaps growth will moderate from here, but, and in that way, we do believe there's reasons for the Fed to continue cutting rates. And so our base case right now is sort of the 3 rate cuts. And we see the consumers reasonably strong, savings decent, the labor market in reasonable shape. So, sometimes it's hard to pay attention to the core and react too much, to a lot of the flurry of activity. But at the end of the day, I think it is that focusing on what are the key drivers for the economy going forward, and then as an investor, diversifying.
Yeah, I think one comment that I would make on the back of that, actually. So the CIO at Wealth Consulting Group, Jim Warden, he recently posted just really taking all of this noise and kind of with the framework of like, let's zoom out. Because when you're in the midst of it and you're looking at the rotation trade, international stocks have done really well in the last couple of weeks. The dollar's down. There's the flight to safety trade in gold. And then you zoom out, whether it's you zoom out a year, 5 years, 10 years, and it's a blip on the radar. And I don't say that because, to completely dismiss it, but to just put that into perspective. And to your point is kind of sifting through that, taking the bigger picture, a step back to even say, like, do I have the right tools in my kit, meaning the right funds in my portfolio to kind of help me navigate this? And I would say too, obviously State Street has an extensive shelf of strategies to help advisors navigate that, diversified strategies, whether you're looking at, tech or international or more concentrated active passive. But I think something that I kind of wanted to drill into today as well, I'm more curious than anything, is when I think of State Street, I always think of like the large passive player. As you mentioned, you guys have an extensive business in indexing, not only in an ETF wrapper, but one of the largest players in the institutional space with large, pensions, sovereign wealth funds. So there is a lot of active development that's behind the scenes. I think that a lot of advisors don't even see, but really the new launch of the private credit strategy, the new launch of the Bridgewater strategy, I would say like these are very visionary ETF products, not only for our industry, but for somebody like State Street, who many of us think of like, the first ETF provider, passive. So as you are thinking about continuing to work with your clients and partners, how does the new active strategy launch fit into that? And then I would also just be curious, given your short time at Bridgewater, if you had anything to do in kind of pulling the strings to kind of help launch this new all-weather ETF.
Great questions. I do think we have as a legacy at SSGA sort of, innovation, thinking about at the end of the day, how do we democratize investing? And I would say these couple of new products really reflect that, because I have a view that, so much of the value creation is happening in the private markets, as there are much fewer public companies, much fewer IPOs, if you go back looking the last 20, 30 years. But yet there's so much liquidity and capital going to private equity, private credit, real estate, infrastructure. And so I think it's really important for investors not only to get the benefit of low cost exposure on a passive basis, which you're right, that's a big part of our business, but it's also to gain exposure to some of these really interesting investment approaches. And so that's really what's driving us, is thinking about, in our conversations with some of the largest, the most sophisticated investors around the world, what are the things that they're thinking about? What are they infusing in their portfolios? And then how do we bring that, all the way to a broader investor base via, largely ETFs?
Yeah, I would say too, something that resonated with me is it allows State Street, your firm, to remain authentic and like what their core competencies and skill set is, while partnering with some of, the best in class providers of these more kind of esoteric, derivative based hedge fund style strategies, private credit, of course, on the other end of the spectrum. So how do you think about the partnership aspect as you look ahead over the next, several years and continue to grow and continue to innovate and bring new strategies to market? Is this partnership model kind of what works best for State Street and kind of the fringe areas of the market? Or are you guys thinking about, the in-house capabilities and how those fit together?
Yeah, no, that's a really good point, because if I really think about what our aspiration is really to be the world's leading partner and provider of innovative investment exposures and tailored solutions. And so this point about partnership that you picked up on, Paisley, is really critical, I think, to our business model going forward. We're not in the business of competing with our clients. We're not trying to be all things to all people. We know what we do really well. And I do think in this world where, change is happening rapidly, regardless of, what role you might have as a financial advisor, you're trying to keep up with all the latest trends, make sure you're putting the right things in front of your clients. But we can't do all things. I don't think it's wise for us to try to do everything well. And so this opportunity to find other, best in class firms to partner with, we leverage the best of what they do, leverage the best of what we do. I think it allows us to, bring really interesting ideas to market on a faster basis than if we try to do it all ourselves.
Yeah.
And I think it's also true, with the relationships that we enjoy on the wealth side. It's very much wanting to be, a value-added partner. If it's a spider ETF, that's great. If it is, a model portfolio on the model wealth platform, we welcome that opportunity. If we can provide, practice management help in any area as advisors are trying to grow their business, I think this is a model that, you cut across a lot of industries, is one that, can be very successful. Of course, I think a key thing is making sure, we pick the right partners, right? That, we're doing this for the right reasons and we bring equal amounts, but different capabilities to the table. But that's what we felt like we have done so far. And so I see, us doing more of this going forward.
Yeah, I think it's super exciting. And I would say personally, I think both the launch of the private credit strategy and this all weather, I think, again, it goes back to the democratization of alternatives in private markets. We saw that several years ago with the launch of a lot of interval funds in the marketplace. I think many of them still pose maybe some headaches or at least hurdles for the smaller advisors. So really having this ETF wrapper really opens the door for individual investors, high net worth, institutional as well. I think that's also a growing trend. If you're a large institutional allocator and you're investing directly in private credit, which most are, this ETF provides them a liquidity vehicle and a trading vehicle as they're ramping up capital commitments and such. So I think there's plenty of use cases, and it's where the market is headed with ETF vehicles. So it's super exciting, and it's great to see, like I said, a legacy passive asset manager really kind of leaping ahead and kind of driving the charge on the new vehicle development.
So in your seat, I'm sure that you've had to spend some time on AI and how it's going to impact your company, but also the industry. What's your view on that? How is AI going to change the ETF business and or asset management and the bigger landscape? What's your opinion?
Yeah. I mean, it's such a big question, right? In many respects, the opportunity set seems immense, and we're only beginning to scratch the surface. I mean, at a base level, I think just gaining productivity within each of our organizations, the ability for people to find information, summarize a lot of these tasks that, otherwise are a little more manual. I think AI is going to help tremendously there. Obviously, the investing opportunity is huge. Just thinking about, which companies are going to be able to take full advantage of this. One of the research pieces we did was just looking across beyond the technology sector, who's going to benefit. And the two sectors we saw the greatest opportunity was in healthcare and consumer financials, which isn't entirely surprising. All of us go to the doctor, right? Having our experts be able to leverage the ability to ingest so much information and find insights makes sense. Same thing with, all the paperwork that's involved in capturing information. I mean, all of these tools will really help streamline that and improve the delivery. Same thing is true on the consumer side, whether it's customer service or fraud protection and the like. So I'm really excited about the opportunity, but I also think we're at early stages of really understanding, okay, where can we make the investment and really see a durable return on that investment? But innately, I think there are huge opportunities in all of this. And so all of our companies really taking, putting aside dollars to invest in this and experiment and to identify where that biggest bang for the buck is, I think is a really wise choice.
Do you see AI in the asset management business really possibly, taking a lot of humans out of jobs?
No, I'm more of the view that I think it's going to help augment what humans do. If you think about the investment process, and Paisley, I'm sure you have a point of view, there's a lot of judgment that's required. I mean, we've had quantitative investing for a very long time as an industry. Yet, you have these changes and dislocations in the market, and what was true is no longer true. And so being able to spot those, I think that's where we would like to see, our investment teams and our portfolio managers be in a position to really focus on those elements that, humans can really provide the necessary judgment, but to allow for, those processes that might be, really quite, voluminous, but perhaps not as value add, for there to be pointing a lot of these tools towards.
Yeah, I would say like my personal opinion on it is thinking about, I think AI will absolutely cut some jobs. For the sheer fact, we think about like 30, 40 years ago when like computers were first coming online and we started to use computers on our day-to-day jobs, and tasks that used to have to be done manually, you can do them now in a fraction of the time, which then frees up your day. And instead of going home early, we then just find new things to work on and new projects and new initiatives. So some of the very like rudimentary type roles, which are probably more transitory jobs anyway, temporary jobs, contract jobs. But I think to your point, like the core of what we do, there's so much expertise and discretion, even in the systematic models or strategies, rules-based strategies that we run. The development of those models is done by humans with computers and AI and technology. So I think it's just going to catapult us into kind of whatever the next venture is and allow us to be more efficient. But in the process, of course, like some things that no longer serve us and allow us to be efficient will probably go by the wayside. And that could also result in some jobs as well. But for those of us that feel as though we're adding value every day, hopefully we're not losing sleep at night too worried about that.
I want to ask you also, Yie-Hsin, about work from home. So we had on Dr. David Kelly. He's a good economist for JP Morgan, one of my favorites over the years. And I asked him about working from home because relatively speaking, I'm a very small business owner relative to big companies like yours. And I'm a little bit biased thinking that most people need more structure, but Paisley works from home. I work from home a lot, even before COVID. I just wonder what your view is on that in terms of productivity,
Yeah, look, I don't know if there's really one right answer, right? But I do think that, taking advantage of, all the benefits of working remotely, where I think, the productivity benefits are enormous. And the ability to connect people, around the world. Whereas before, if we went to see a client, we would fly all the experts that we could bring to that meeting, but it pales in comparison to who else you can bring into the conversation if you leverage technology like we're using right now. I think on the other hand, it is important to bring people together also, because this notion of brainstorming, creative problem solving, building relationships, now that, we're sort of all back like on planes and visiting each other, is something that I realized it was much harder to do in more of the virtual environment. And so finding that right balance, and I think it is somewhat role dependent. How much time do you need, where you're really just focusing on getting what you need to get done, versus, the other pieces, which I think are just as important because we're all part of larger organizations. We want our people to feel like they're part of something bigger than themselves. They understand how they belong, how they're going to get invested in, how they grow their careers. So, trying to find that right balance, I think, is probably the most important thing. Recognizing that each of these environments, being more open to virtual means that we tap into a much broader talent base. That's a positive. Right. So thinking through all of these and then crafting the right solution, I think probably the best approach. But easier said than done, I will say.
I always say too, again, just working with the undergraduate students, I think back to when I started this career and I was on a trading floor, and it's exciting, but more importantly, every single minute you're at work, when you're fresh out of school, you're learning. And so much is absorbed by just listening and hearing what people are talking about, the questions that your colleagues are asking of one another. And so again, feels biased because I've worked remotely for 8 years now from home. I miss the days, I think, of being able to engage in an office, but it's so important for the younger generation, irrespective of the role that you hold, the company you work for, small, large, anything in between, to have that interaction. I can't imagine how difficult it would be to be starting in an industry, feel so overwhelmed. And the only way to ask questions is to pick up the phone, take someone's time that's more senior. And then you have to be very succinct and to the point and such. Like those natural conversations you can have in an office are so important. So I always try to stress, if you're coming out of school and you're applying for a job and it's full-time remote, make sure that you have the opportunity to visit in person, or there's an office, maybe you can visit a couple days a week and maximize that in-person time. But then to your point, everybody learns differently. Everybody engages differently. I'm a full-blown introvert. So for me, I can focus and I can work throughout the day. Whereas when I was in an office every single day, it was almost kind of emotionally draining some days where everybody's chit-chat, you're out to lunch and it's like a lot of people time for me. So other people tick that way. Some people that have had to work remotely through COVID were miserable. So back to your initial question, Jimmy, on some people do need structure and some people want more structure. And it's not a one size fits all, which makes it so hard for all these companies that are larger to have these processes in place and structure in place, because everybody just, especially post-COVID, has found out they all work very differently.
Well, I think that's sort of where I've landed. One, we've benefited from having, ability to hire people from a talent perspective. I mean, if I was just selecting out of Las Vegas, for example, where our home office is, or where I'm at mostly, it'd be very difficult to get other people that we have on our team that work for us now. And then also, I think from a like you said, the younger people that come out of college, especially in our business and finance, having the ability to get mentors, and you wouldn't probably get maybe some mentors if you didn't have a chance to, meet them in the office and things like that. So anyway, thanks for sharing that. I've got one last question that has nothing to do with work. What do you do for fun? What are you into? What are some of your hobbies?
Oh, I love traveling. I love spending time with the family, reading. Those are probably a couple of things that I enjoy doing.
Do you read fiction, or do you read just finance stuff or economic stuff?
You know what? I probably read a little bit too much business books than I do
I'm the same way.
Yeah.
Okay.
But that's a good reminder. I might need to stick that up a little bit.
Paisley, is there anything else you might want to ask before we let her go?
No other questions. Just wanted to say thank you for the time. I mean, one thing that we didn't explicitly mention that I think is so impressive, and I don't say this to embarrass you, but I say it just so people understand the importance of having you on this podcast, is all of the accolades and awards and acknowledgement that you've received. Again, being a woman in this industry and then rising to the top and really being able to impact people's careers. I mean, between Forbes and Barron's, the most powerful, influential women in this industry and in the world, in finance, I think that's something that we're very grateful to have your time today. So just wanted to say thank you again.
Yes.
And kudos to Jimmy for securing this.
Well, first of all, thank you very, very much for participating. I know that your time is very, very valuable. And so I will say at the end here, I've got a list of her accomplishments and things she's been recognized for. But during her time in her job at New York Life, I think the AUM increased fourfold under your leadership. In 24, you were named to Forbes' top 100 most powerful women in the world, in Barron's 100 most influential women in the U.S. finance, selected by American Banker as one of the 25 most powerful women in finance. 23, Yie-Hsin was recognized by Pensions and Investments as one of the most influential women in institutional investing. She's a vice chair of the board of governors of the ICI, Investment Company Institute, and a member of the board of trustees for Northwestern University, our alma mater, and the Women's Forum of New York, and so on and so on. Anyway, You have a lot of accomplishments. You're so nice too. Thank you for being so nice. And I hope that all the young women in the world that may listen to this or watch it someday, maybe you can influence them too, and you too, Paisley. So thank you both, and appreciate your time, really do. And we appreciate the partnership with your company. We've always loved your company. And so thank you very much.
Come and dance on our floor.